Okay. Welcome everyone. We're just letting everyone into the from the waiting room. We've got a very popular speakers coming in today, so we've got quite a few to let in. So if you could just give us a moment to allow that to feed through, we will then get cracking for the day. So it just takes a moment. Welcome from all over the country. I know we've got people all the way from Cairns across to Perth and down to Tasmania on today. So we've a very widespread and probably even more. We should all be very happy and excited for everyone to be able to work out the time differences. With so many zones, so many zones, it's unbelievable. Yeah. So well done for getting the right times, everyone. Okay, so for those who know me well, one of the sayings is we reward those who are on time, so we will get cracking. So welcome everyone to the first of the Jonge webinars for 2026. It's almost too long into the year to be able to say Happy New Year, but for some of you, I know I haven't had a chance to speak. So Happy New Year to everyone. We are very blessed today to have some very knowledgeable speakers from the ATO. We have Kelly Norwood and Gary Busby joining us. Kelly, I'll let you talk a little bit about your role because there's a whole lot of things involved in that, but you're the Assistant Commissioner in Strategic Performance and Engagement. And we have Gary Busby, who's a Senior Insolvency Advisor at the ATO. So both of them are very much at the forefront of the areas that us at Jonge spend a lot of our time trying to educate in, and we are really looking forward to getting their insights into everything. So welcome Kelly and welcome Gary. You're both on mute, so yep, take yourselves off so that we can hear you. Kelly, I guess let's start with yourself and talking about the ATO is obviously its role is very impactful in the way the economy and society can work and is working when it's in a tough environment like this. So how would you describe the role of the ATO when it comes to dealing with the economy and society?
Yeah, thanks, Ashley. And hi, everyone. Thank you so much for having myself and Gary join you today for a bit of a chat. So I'm an Assistant Commissioner with our Frontline Operations Group and really looking forward to share some insights around how the debt that's currently owed to the ATO, the actions we're taking around payment, etc. But before we kick off, I would like to begin by respectfully acknowledging the traditional owners and custodians of the land in which we meet today, pay my respects to elders past and present. I'd also like to extend that respect to other Aboriginal and Torres Strait Islander peoples with us today. I meet with you today from Adelaide, which is the traditional land of the Kaurna people. So the ATO has a really important role to play to collect tax so the government can deliver services for the Australian community. It's really important to note that everyone has a responsibility to meet their tax and super obligations. Yep. And not paying your tax does affect everyone. And when taxpayers pay late, they do pay more. We do have a really concentrated effort though around people that might be doing it tough and small businesses as well. And last year you might have noticed that we launched a vulnerability framework where we do have specialised teams available to support those that might need some tailored support as well.
Sorry, Kelly, I'll just interrupt you there for a sec. If everyone can please make sure that they are muted so that everyone can hear. Our people will be checking and blocking you yourself, but if you can keep a look on it, that would be great. Sorry, Kelly, keep going.
Oh, that's perfectly fine, Ashley. I might just throw back to you to take the conversation.
Okay. So I guess from Jonge's point of view and what a lot of the people who are interested in what we do, we're dealing with obviously the debt side of things. So what are some of the key issues that are on the radar for the ATO at the moment? And what would you say are your particular areas of focus?
Yeah, in terms of areas of focus, it really is in our recovery work, and strengthening payment performance continues to be one of our key enterprise priorities that you would see detailed in our corporate plan that gets issued each year. We really are focused on improving on-time payment and reducing the growth of debt. But partnered with that, we're really here to support taxpayers to meet their obligations as they fall due. So, from a recovery perspective, our key focus areas are about preventing new debt and improving compliance. And we're really trying to use every taxpayer interaction as an opportunity to talk about outstanding obligations and the consequences around those. Support is important, and we know that some people are doing it tough, and we're really here to engage with taxpayers to help them get back on track. But we do have a firmer action focus for those that don't engage and don't want to pay. And so we will apply stronger enforcements like director penalty notices, garnishee actions, etc. But like I said earlier, big focus is definitely on identifying and supporting taxpayers experiencing vulnerable circumstances as well.
So and I know it's probably going a little bit off the question line, but it's a really interesting point. We talk about using the firmer action for those that don't want to pay. Would it, if from our experience, it's not necessarily that they don't want to, but their business is in a position where they don't have the ability because the economy is becoming so much tougher. A question without notice, and please, as we've discussed before, if it's not an appropriate one, you can send me away. How do you? Where's that line between? I know that we've got clients who want to pay, but their business is no longer in that state where it can pay to the level that it needs to. Where's the thought process with the ATO on that front?
I think actually the important point to note here is engagement. So I understand that people are doing it tough and might not have much capacity to pay their debts, but still engage with us. Engagement is the key. Reach out and have a discussion with us or seek some financial advice as well. We do work really closely, obviously, with the tax professional community, but also more broadly, advocates in the system as well, such as financial counsellors. They do a terrific job as well to support small businesses and taxpayers. So step one is engagement. With the vulnerability framework being launched last year, we have stood up some specialised teams to work with people and small businesses that are in financial hardship or experiencing severe vulnerability. And we do have some different options that we can explore in regards to maybe that would look like giving additional time to seek that professional advice, seek some advice from a financial counsellor. Or maybe we need to think about tailored payment plans as well. That might not be the traditional payment plan of 3 years, but in some circumstances, if it's appropriate, we can look at other options.
Okay, cool. I will, getting sort of back to, we talk about collectible debt and total debt, and there's the numbers that are in the market, and they seem to vary every week, and depending on who wants to tell you what number they want. What as we sit in the last couple of months or whatever the latest numbers we can have, what is the total debt and what you consider collectible debt, and what is the difference?
Yeah. So the total debt book is sitting at around $118 billion. And like you said, Ashley, it depends on when we extract that data, but that's a good approximate figure to put out there. About 48% of that is collectible debt. So over 50 billion is collectible debt. The other components of our debt book will cover things like disputed debt, insolvent debt, and debts on hold. So there is some debts that we have deemed as uneconomical to pursue, and we've placed them on hold, where what that means is we're not taking active recovery action against them. But as we start to see signs of a taxpayer or a business being able to have capacity to pay, that debt on hold would move over into our collectible part of the debt book.
Right. Okay, cool. Thank you. So when we talk about firmer action, obviously you mentioned DPNs, we mentioned garnishees, and I'll add to that the debt reporting. If we can start with DPNs, because obviously that for individuals or the directors, that obviously can have some fairly significant personal ramifications. The starting point, I guess, is when is it used? Why is it being used to try and attach it personally, and how aggressive is that? Are you in that pathway at the moment?
I think the first part to this, Ashley, is just to note we do a lot of effort to engage and actually work with a business or a taxpayer to find a viable way for them to engage with payment plans or making full payments, etc. So there's a lot of those steps that will happen first. We certainly don't jump straight into firmer action.
No.
It's quite a far bit along our pipeline. But
Yes.
director penalty notice is certainly, I guess, one of the tools that we do use to collect on that debt book as well. And it's really important to note directors are responsible for ensuring that the companies do meet their tax obligations. And that's looking at those obligations across pay-as-you-go withholding, GST, super guarantee, etc., and ensuring that they fall by the due date. Director penalty notices do remind directors of the personal liability they face when these amounts are not paid on time. With the DPN, once we issue them, a director does have 21 days. And in that 21 days, it's either about paying the corresponding penalty amounts in full or really engaging with us. It's another prompter to actually come to the tax office and have a conversation and take that opportunity to negotiate a payment plan for the company debt. The other option, though, that they can explore is lodging a defence, depending on certain circumstances where they might think that the director penalty notice is not appropriate to actually activate as one of our tools.
Yep. So, obviously, engagement, well, I won't call it obvious, but engagement with you when the DPN's on foot doesn't, and I want to be really clear on this one because there is still a lot of misinformation. Engagement and entry into a payment plan doesn't actually get rid of the DPN. Like it will still expire and they'll still become personally liable if they enter into a payment plan. Am I right in saying that? If that's a bit technical, we can come back to it.
Can we come back to that point,
Sure.
Ashley?
Yeah, no drama. I just because I think that it used to be I know the guys who are doing the work in the background, it used to be included as one of the options to remit a DPN, but my understanding is it doesn't now. But we will come back to that one. In regard to business disclosure debt, that's obviously a relatively new option that the ATO has had. When I say new, it's about 5 years old now. And certainly a lot of the report in the press is saying that that's a very big tool that you've been using in the last year. And I think we're up to the last numbers I think I saw were 33 or 35,000 businesses that have been reported. Can you talk a little bit about why that tool has become such a useful one to you?
Yeah, so disclosures are used to really encourage businesses to engage with us and take the necessary steps that they need to confront their debts and look at their overall financial position sooner. I think it's important to note that this is when tax debts are at least 100,000 and they're overdue for more than 90 days. So again, it's further along our pipeline, so to speak, that we do try and engage and do other actions with taxpayers and business before we get to these sorts of firmer action activities. But another reason why I think it's a good tool to use, that if a business isn't addressing, I guess, their tax debts, it's likely or very probable that they might not be addressing other debts, and that's a risk to the broader taxpaying community as well.
Okay. So it's part of that good corporate citizen to let everybody know that there's problems there. Because in fairness, it used to be one of those things that was hidden from most businesses. You could do a lot of things and not include, and no one would know that your ATO was outstanding. Have you found what's the so by issuing all of these, have you found that and again, you may not have the data, but how many of them then engage compared to you need to keep going down a firmer path?
I don't have that data in front of me at the moment, Ashley, but I'll just leave it for the team to come back with that one.
See if we're
What I
lucky.
will come back to,
I'm
though,
making them
Ashley,
work. Yeah. I'm making your team work in the background. I'm sorry.
No, no, that's okay. Because if it's data that we have publicly disclosed already, then very happy to share that with you. So we'll just
Yeah,
check that in the background.
sure.
But the team has just come back to clarify around the DPN, though, is that the DPN isn't remitted via the payment plan. So
Yeah.
the payment plan will allow the debt to be paid down, but the DPN will still exist.
Yep. Okay. Cool. Thank you. The so we'll come hopefully come back in terms of how successful some of these things are, because I guess if we're putting all these pressures on business and we see the disclosure has a lot of ramifications now, because once they hits the credit reporting, suppliers stop working, and it really puts the business under probably a lot of undue pressure. So it'd be good to know how much of that is actually works. The other one, which you haven't used a lot in my experience, but it seems to be becoming popular again, is garnishee notices. So, where does that fit in the cycle? And and when and why are you using those?
Yeah, so again, garnishee notices are one of our firmer action activities, and it might be more of a decision point on what is the right firmer action activity, depending on the broader circumstances of
Sure.
the taxpayer or the business and their financial position as well. But we do consider a number of things before we issue a garnishee notice, which is really important to probably highlight as well. We do look to understand the financial position and the circumstances of the taxpayer, and also understand the steps that they've taken to make payment as well. We do have to think about complexity of the taxpayer's affairs as well, and what sort of solution might look like a better one to actually explore for that taxpayer. Um, and we do have to think about the likely implications of issuing that garnishee notice as well, on what that might have to the taxpayer's ability to provide for their family or maintain the viability of their business as well.
Yeah. Okay. All right. Yeah. And I mean, I guess all of these matters, you're only doing it when you feel as though you're running out of options, and that's the next step because of the lack of engagement along the way.
I think that's right, Ashley, but it's also, we do think more broadly about the taxpayer and look at a lot of factors to be very sensible in our approach to firmer action as well.
Sure. Okay. I will jump in on one of the questions just to, I guess, highlight around the DPNs, the process. Um, I know that and I'm happy for you to say if I'm wrong, but the DPNs get issued to the director's address as per the ASIC records,
That's
and
correct.
that's done via hard copy. Are they using all of the new electronic systems? What other communications or however else is it being sent out now? Is there any
Um,
other way, or is it just through that measure is the primary way that it's being done at the moment?
I'll just check that with the team, but we'd have to make sure that it was through a secured channel, and mail is considered a secured channel for us to provide information. We
Yep.
certainly wouldn't be using unsecured channels like an email channel, as an
Oh no,
example.
yeah, yeah. No, I understand that. Whether it was coming through the portal as well, I guess. I know that you can see it on the portal when it gets popped up, but it's not the actual letter. You've got to go looking for an extra debt that gets added. So it can be a little bit tricky for everyone to see it. All right. So if we look at all of these options and then we start talking about the insolvency, Gary, and I guess I'll open up a little bit with yourself. Um, the um, the small business restructure again came in about 5 odd years ago. It took a little while to get a bit excited and people to start using it, and it's become one of the most popular forms of insolvency for a while. Um, I'll just, I guess, start with a fairly broad thing. Where is it sit in the market from your point of view, and where's the current status for the small business restructures in Australia?
Thanks, Ashley. Yes, you're right. The small business restructuring process was introduced in January 2021 and had a very low uptake during the first 6 months. In fact, the following 12 months was also pretty quiet. But if you fast forward to the financial year ended 30th of June 2025, small business restructuring had become the second most common form of corporate insolvency. So sitting behind creditors' voluntary liquidations. So in that period, 1st of July 24 through to 30 June 25, there were almost 3,000 SBR appointments. And that compared with just over 1,400 in the previous financial year. So certainly a lot of traction on that front now.
Oh, yeah, sorry, I thought you'd frozen there for a sec. So, it certainly hit some fairly big highs, and it seems to be coming off that now. And part of the talk about is, the fact that the ATO is probably being a little bit more cautious in their voting plans and what they're accepting for an offer now. And so, can you talk a little bit about where the mindset is now on what is to be considered a good offer compared to what we did have? I think 3 years ago, 2 years ago, the average was about 20 cents in the dollar. The talk at the moment is it's now up to 45 cents in the dollar for an offer. So can you give a little bit more in depth into what the thought processes of the ATO are into what makes a good offer?
Yeah, sure. Look, we certainly have refined our approach, and I think as the market's matured, we've also matured in our approach, and we have a very structured way of dealing with the plans now. So, we obviously expect the company to put forward their best offer they can, in their own circumstances. And particularly bearing in mind that once a plan is issued and that voting period starts, there's no opportunity to revise the plan. So it's really important that the best offer comes forward at the beginning. So what we look at the company's compliance history, and we also look at the level of engagement that we've had with the taxpayer. And then we look at the individual financial position of each company. So, we look at what the assets that would be available for in a hypothetical winding up. So we expect the recovery under a restructuring plan to be a superior outcome to a winding up outcome. We do look to see, at a number of governance issues, whether the company has been using director loans or related party loans, which have built up while the tax debts, remained unpaid. And, we do expect to see the contributions offered on the plan, at a level to sort of compensate for loss of value that's leaked out through loans that aren't being repaid by directors or related entities. And we also have a bit of a focus on the viability of the business going forward. I mean, we don't really want to see a business that can, temporarily gain some relief from postponing or compromising debts, but the underlying business is still not viable, and it's going to, become a repeat insolvency in the future. So we do look at the viability of the business going forward.
Okay, and just on the compliance side, the fact that obviously a client needs to look at doing an SBR, that would indicate there's a non-compliance there. What specifically are you looking at with compliance?
Yes, look, there's a couple of things we look at. Obviously, it's lodgements on time. Obviously, if they're in an SBR, then there's still some tax debt that hasn't been paid. But there's still the expectation that lodgements will be made on time, so that we can actually gauge what the debt is on the account, and if necessary, take some recovery action sooner before the debt gets out of control.
Yeah. Okay, that makes sense. Yeah. So Because I always found you hear the comment about, oh, your compliance has got to be good, but if you're not paying it, then obviously there is a compliance issue. But it's more around the reporting of it that you look at from the compliance point of view.
It is. Look, I mean, we see a whole range of levels of compliance. We see some people applying for restructuring plans that have never paid a single cent in tax over several years.
Yeah.
We have others that, the compliance has been a bit patchy, but overall, not the worst cases we see. And it's just one of the factors that we look at when we look at a plan.
Right. And I guess from the other side, so given that we seem to be seeing a higher level of rejection, so what are a lot of the reasons on the other side of that of why plans are being rejected these days?
Okay, look, there's poor tax compliance is one of the factors. As I say, we've already covered that. So,
Yeah.
where there's been frequent late lodgements or little or no payment of tax over an extended period. The other thing that we see a lot of is non-payment of director or related entity loan accounts. So these are loans made by the company to directors or related parties. And where that happens, we do expect creditors to be compensated for that loss of value through the contribution they make through the plan. So where the contributions aren't really matching what's been lost there, it makes it more difficult to support the plan. Another thing that we do see is what we call the deprioritizing payment of tax liabilities. So this is where the tax debt's continuing to grow, but at the same time, the company's paying down its other creditors, and this can also include director or related entity creditors as well. Why that tax debt is expected to be compromised under the plan. So again, that's something that we also take into account.
Again, so that's a question without notice, and I apologise. And yeah, obviously, we've said from the start that you've got the right with questions without notice. But in my personal humble opinion, it was probably overused and everything was approved early on, and there were ones that shouldn't have got through, I believe, that did early. Now we're finding that the pressure is on to try and correct that, and it almost feels like there's an over necessity for it to be really clean and perfect. Is the ATO trying to sort of right the ship to get it so people are seeing it the right way? I think I'm not explaining myself very well. I guess 3 years ago everything got through. Whatever you want, you put a plan up, it seemed to get voted up regardless. Now, there are good plans that don't seem to be getting through for fairly minor points. Do you feel as though the ATO is sort of pushing the pendulum one way, which will then bring it back somewhere in the middle? Because the SBRs are a really good option for small business, but they're actually getting almost impossible to get through at the moment. So do you think we're just on that pendulum? Am I making sense?
Look, for the plan to get through, the underlying business has to be viable. Otherwise, there's no point going through the process. Where creditors are asked to compromise large amounts of debt, they obviously will scrutinize past behavior to make sure that there's not an abuse of the process. So I think, like everyone else, when the process was introduced, and it was introduced, as an emergency action at the time during the COVID pandemic. Look, it takes a while for everyone to actually understand how it works, and we feel that we've actually gone a long way in terms of trying to be as transparent as we can in terms of our expectations and the things we look for. And as practitioners that deal with SBRs will be aware, we do issue an information sheet, and this has evolved over time, but it really is a much more structured approach, I think, that we're taking now. With the benefit of the experience that we've gained during the process. So I just see it really as an evolution, really. And quality of plans is always an issue, and that's why we do offer to review draft plans if the information can be provided to us, in a timely manner, so that we can give feedback and hopefully that we can reach an agreement, on a plan that will work for both the ATO and the company in those circumstances.
Yeah, and I certainly, with the practitioners we work with, there's no doubt that the communication levels are quite high between the ATO and the practitioners when we're assisting directors in appointing. And certainly you're getting some clear understanding of what's good and what's bad. And it's certainly helpful when we're trying to put those together plans and help guide people through. So given that you're the czar in SBRs, is there anything else that you wanted to talk about with SBRs that I haven't sort of allowed the doors to open on to cover off on, and what's going on and where you're moving to?
Well, I think I just want to say that generally the ATO is supportive of the restructuring process, and we will support viable plans where there are no public interest concerns around it. But as I say, we've been put a lot of effort into letting the market know what our I guess our tolerance is for plans, so that we do see it as a a really good opportunity for viable businesses to restructure their debt and continue going forward. And we'll continue to support that wherever it's appropriate.
Fair enough. All right. Awesome. Thank you. From a overall perspective, Kelly, and this might sort of bring it back to yourself a little bit, and then we'll start looking at some of the questions because the guys would have had a chance to review some of those. There's been talk, I guess, over the last couple of years about insolvency numbers coming up and the ATO getting more aggressive and moving to more wind-ups and more processes. But when you look at the latest data, it probably hasn't had the uptick that I think a lot of the people thought there was going to have. Do you see the next 12 months that you're going to continue at about the same level, or are you trying to ramp up to get rid of a lot of this 50 million, either turn it into insolvent debt or get it paid? Is there more pressure on that now over the next 12 months?
50 billion rather than 50 million, Ashley.
50 billion,
It's an extraordinary
big
figure.
number. Yeah.
It is. Look, we will continue to have a very strong focus on our debt book and collection of payments. I think the important message to say, though, like we said all through this seminar today, is just the balanced approach, right? We will look to engage. We will look to encourage on-time payments. We will look to negotiate payment plans. We will look to work with the taxpayer and the small business to understand their circumstances. If businesses or taxpayers are not engaging with us, are not looking to make payments, we will move into those firmer actions, and we will move faster into them when that willingness to engage doesn't exist.
I'm going to throw this in there because I reckon you're probably going to, because it's not on our list of questions, but hopefully the guys can work something out. I noticed in some of the stats that bankruptcy is still very low, even though we've got a really high increase in DPN numbers coming through. And I know myself with a number of our clients that have got expired DPNs after companies have gone into liquidation, that we're not seeing very quick or aggressive action on the directors at the moment. Do you know if there's any plan for that to up ramp, or that's not the focus at the moment?
Let me take that question, Ashley. Thank you.
Sorry, the questions keep getting opened up in my mind about where we're going. Okay.
Yeah.
So there's a couple of questions here just that I will look to probably come back to you Gary, as this might be one that you can answer, although being in the insolvency area, does the ATO have similar rules and requirements around using dockers? So when we do a voluntary administration and into a deed of company arrangement, the approach of the SBR, is that very similar at the deed of company arrangement level?
Yeah, look, happy to take that one, Ashley. Yes, I can confirm that the approach is very similar.
Okay. So and really, they're really pretty much the same thing, I guess, but they're around some same rules around that whole checking against liquidation, and then obviously the compliance issues and all that sort of stuff is pretty much the same things that we look at.
Look, it is um, the approach we've taken on SBRs did evolve from our standard approach to dealing with deeds of company arrangements. So we've taken that and developed it further to be specific to SBR work. So there's been no real change in the approach we take to Dockers as compared to SBRs. Of course, the critical difference here is the voting regimes.
Yeah, yeah. Obviously, there's some very significant differences there.
Mhm.
Okay, so there's another question here. Appointing a liquidator used to be one way of remitting a DPN, but that has been changed to a company begins to be wound up within the meaning of the Corporations Act. What's the difference? Well, you're the expert in this one, but I actually believe that that's roughly the same thing. Appointing a liquidator and being wound up liquidation is a tool, wind up is the process. But Gary, you're probably more the expert in the wording on that.
Well, I'm probably not, because I don't deal with court wind-ups, but so that's probably something we need to take on notice.
Yeah, but from my point of view, I think it's just a change in wording. But when a company is wound up, it goes into liquidation, and that it certainly is one of the three under a DPN outside paying it that will remit it for that person. I guess from my point of view and for the clients that we deal with, you talk about engagement, but most of our clients find that it's like we want you to engage, we want you to do everything, but we don't have the ability to pay it in the time frame that you want. How do we balance, Kelly, that line between as I said at the start, the clients do want to pay as a general rule. And I actually find it quite amazing in the Australian economy that how much people are willing to give up of their own assets to a company because they want to do the right thing. But when that timing doesn't work with yourselves, and there was a comment here about payment plans past 3 years, where's I guess the philosophy, and I know it's different for every individual circumstance, so I know that we can't be specific. But is there sort of guidelines that can make the difference between an advisor understanding, hey, sorry, there's no point us trying to get over 3 years, and compared to you need to look at insolvency now, or are there guidelines that can help advisors in guiding people on that?
Yeah, and like you said, Ashley, you hit the nail on the head. We have to consider individual circumstances. So there isn't guidelines or a certain rule book that we can follow to say when up to a 3-year payment plan is the most appropriate option, or something that's a little bit more tailored, which might be an extended one.
Yeah.
What I would suggest for your, like if you're advising and supporting someone and helping them with their financial position and working with their tax debts, we do have specialised teams that are there to listen and understand and actually make good decisions with the taxpayer and the business and their representatives if a more tailored or a longer payment plan might be appropriate. Because in some instances, it does work. We have seen I guess taxpayers come through the other side really well by having a longer payment plan. So it might be quite appropriate. It might also be that we need to consider some other things as well, depending on what's happened in their circumstances. We might want to look at priority processing. We might want to consider deferrals or penalty remissions, etc. So there's quite a few things that we should be looking at holistically for the client to consider what's the right tools or support options to activate for them.
Yeah, so it comes back to getting on the phone and trying to work it out. Yeah.
Well, it does. And that's why we've got those specialised teams in place. They're there to talk to, tell them what's going on and let them work with you.
Excellent. Thank you. All right. So we'll start to wrap up. There are a couple of questions again coming through. Just need to, what have we got here? So we've just had clients want to pay something. The ATO would not let them. And have been put it on hold. I've found paying something assists in the change of mindset the clients. So I think that's just a general comment more than a question.
I think it's a good comment though, Ashley, because you're right. We do see people be more engaged back with the tax office when they do make some voluntary payments, and that might be the voluntary payments that they can, they've got the capacity to do. So I would encourage that. Even if they don't have a structured payment plan in place, we do promote making what payments of what you can.
So doing something rather than nothing shows at least some form of engagement. Okay. Two longer periods. No. Yeah, again, there's just I think comments more rather than questions there. So look, we'll start to wrap things up. Gary, did you have any final words that you wanted to specifically say to the advisors out there listening today?
Look, in terms of small business restructuring, I think that I would encourage advisors and directors to think about taking up the ATO offer to review draft plans before they get to the stage where they cannot be changed, and the voting has to be made on that plan itself. So that early engagement, we're finding that if people do take us up on that, we generally get to the stage where we have an offer that's acceptable. So that's something that I would I would recommend that people consider.
Thank you. And Kelly, I guess any final thoughts that you would like to say to everyone in the advisors?
Yeah, look, I'd just like to thank everyone for inviting us here today and having time with you. Any questions that we didn't get to in the chat, send them through to my team. We'll have a look at them, and we can always send back to Ashley what we can answer for you to share with the group. But the final thing I'd probably like to mention is I recognise we're on a bit of a national footprint at the moment, and we've had a lot of adverse events happen across the country since we've come back from the new year, especially the Victorian bushfires. The federal government has announced some more local government areas that have been impacted and are eligible for some disaster relief. So if you've got taxpayers or businesses in any of those areas, we have put some pauses on certain activity. But as we do start to resume business, if they're still struggling and they're impacted by those natural disasters, please get in contact with us so we can work with you on what's the appropriate thing to do for your taxpayer or your business.
There's nothing crazier about Australia in January, is there? So in January we had massive floods up in Queensland, which we've almost forgotten about, while we've got bushfires down in Victoria. Then we had landslips and flash flooding in other parts of Victoria and stuff over in Perth. Now we've got cyclones. It's a never-ending saga around this January, February down here in this part of in our world. For everyone listening, so Kelly, Gary, and all the team that are sitting in behind, thank you very much. It's quite an effort to be able to get such great people from the ATO to come and talk to us, and there's a significant amount of effort that happens with the team in behind. So Xander, Jonathan, there are others in that list, but thank you very much. From my point of view, to everyone listening, thank you for coming along today. we are certainly seeing, as we've talked about, that there is an uptick in collection. People have been not engaging, so therefore things are starting to happen. If you have clients that have issues, obviously from our point of view, they do, if they're engaging with you, engaging with us to look at options on how they can work their way through it are critical at this time. Things do keep going. And I think it's quite clear from Kelly and Gary that if they don't do something, something's going to happen to them. So it's important that they engage, and our firm obviously is here to help with that all the way along. For everyone listening, please look at the website. We have our seminar series starting up in 2 weeks' time. Noticed a couple of people saying hello from Cairns. I'm actually going to be up there in Cairns with the seminar series in 2 weeks' time. So please jump on the website and register. We start our regional Queensland on Tuesday fortnight, and then over the next month across the country, we've got our seminar series, and we actually have a company, ATO Mate and Omble, coming along to talk about how you can actually use the ATO's data and the information that's in the ATO to be able to get better access to your clients and better access to support and help them, and probably engage earlier. So all of that stuff is in the chat there as well. If you have any other questions that you do want to ask of the ATO, please send through my email. We will then forward that on, and if appropriate, we'll pass that back around. If it is personal and it is about an individual file, that will be taken offline from us. Please don't send me private information on clients, because that's not where we fit. But again, Kelly, Gary, thank you very much today. I hope you have a wonderful rest of the day, and look forward to catching up with you again soon. And thank you to all our listeners. There is a poll there. Sorry, I'll get into trouble from Stella if I don't tell everyone about that. So please have a look, fill that in if you can. And apart from that, thank you very much for for coming along. And we'll be back in April, I believe. I think we have a break in March while I'm traveling the country doing the seminars. So we'll be back with a webinar in April. All right. Thank you, everyone. Thank you, Kelly. Thank you, Gary.
Thank you, Ashley. Bye.